Tuesday, August 5th, market analysis, Stan Ehrlich, starting a little late, 2:11 California time. We always start out with stock indexes, go to futures, and then a few stocks or a variety of subjects. And I'm going to be talking about the October lows coming up a lot in the next month and two, of course, August and September, and into October until they happen, and then afterwards. Hopefully they'll happen again. So we've got a bearish engulfing or two in the last several days in the stock market indexes, and we've dropped off very sharply on Friday. Now, on Monday, yesterday, the market held around Friday's lows, which was also around the lows that were made in early July for a couple of weeks, and in some cases, back down to approximately the highs that were made back in November, December, January, February, in this case, a little under, but around those important historical highs. That was before the big break, which we got obviously a big green buy buy signal, almost at the exact bottom day. Now, on the exact historic high, new high price day, July 13th, I believe we have the beginning of a move down to October for the October lows. And I'll give you statistics and charts and stuff like that in the next couple of months to prove my point, as I've done for years, probably over 10, about this particular seasonal tendency, what to look for, et cetera, et cetera. But this could be, should be, I think, was the beginning last Thursday. And I think I even said that last Thursday. Go listen to Friday and Thursday. Okay, so the slightly lower close today is on its way down. As I said yesterday, I think that just because it closed firm near the high, a little bit above the high of the previous day, but a little bit below usually, but a big, strong up day does not necessarily mean the market is going to go straight up. I think those verbatim might have been my words. Nevertheless, we opened a little bit stronger, minor new high, and dropped. So now we've got Friday's high, Monday's high, and today's high as a very short-term little shelf of resistance. Important, if we close above that, there could be a pretty good rally, and it might even do some damage to my current story and expectations, obviously. But if we stay below that level, give or take a little, and start closing lower, especially if it makes lows lower than Friday's lows, then everything should start to fall apart substantially and trend lower. Next chart, you got the 5-minute chart on the E-mini. It just plain started to dip down somewhat today after opening, fiddling around, mostly in the quote-unquote pre-market session, and then started to break. And we've got those two bearish engulfings, and the SPY with historic highs involved on Thursday. Gap has been closed on Monday. No reason for it to go up more. It didn't. It turned around, closed a bit lower, 3 points. And the 5-minute chart, not showing you too much significance at the moment, except the rally stopped around a little higher than where it was needed to close the gap. Next chart, two bearish engulfings on the QQQ, including historic highs. Gap down on Friday. We closed the gap yesterday and went up a little bit more today, but plopped back down. Now, I can't really say that I would be using today's high or yesterday's high as a little resistance, but today's high does correlate slightly with a couple of weeks ago, and a couple of days after that, sort of not great. Next, just looks like it's going to continue lower, frankly. Next, two bearish engulfings on the NQ. That would be Tuesday last week, and of course Thursday, the important one. Drop to support, bounce back, and yes, you could use today's high and Monday's high and Friday's high as a little shelf of resistance. So far, not that significant, but that's all I got to work with at the moment. Next, just simply coming off. Next, we got one sell signal at the beginning of the double top in the YM, which double topped out, broke out to the downside, got approximately 50% to its minimum downside objective, and hit support. Oversold condition, bounced. I think that's maybe it. Didn't close that much lower, but it didn't have the follow-through, and it doesn't have much company in the other indexes helping it, go up. Next, just a 5-minute chart on the YM. Okay, the Russell up into resistance. I've said many times it doesn't act at all like the other indexes, particularly the spider and the NASDAQ. So this is a resistance area, not overbought. Nothing I can say except it might go up a little bit more, but I don't expect much. Pardon my cough. I do think it's going to get caught up in the downside move that I think we're going to continue to have for this week in the other indexes. And a little resistance stopped it when the bell rang, and that's about it. Doesn't look good, bad, or indifferent, frankly, to me. It's got all this resistance from previous couple of weeks, it looks like, just a little bit higher. When you start to look at the numbers, that looks like 2249 and a half. Next, we've got the bonds. Again, bonds survive another minor up day. This time, the early rally, or late, whatever, which it was, I don't care about what time of day, was getting it into overbought condition. Barely, but turned yellow, meaning the RSI, my custom RSI, hit 75 or higher. So that's why it's yellow. And that's it for today. Now, I think they could still go up a little bit more, but the key at the moment is to stay above the neckline, especially on a closing basis. Yesterday, it went below it and then popped back up above it with a new high close for a few days, which is great. I still have a minimum upside objective on this little head and shoulder bottom, which started on July 8th, bottom July 16, last shoulder July 24. So this is only 3 weeks or so in size, pretty small. But it by itself is the last shoulder. On the head of the formation was back in May of 22, and the first shoulder was on April 9th of 2025. I say 22, I meant 25. So that was May 22nd. So this is a much larger formation, which says we're supposed to go all the way up to 122 plus, and it has broken its neckline on Friday, follow through Monday, a little bit more today. So just let's stay on a closing basis above this neckline. That would be good. A little higher first, maybe, then a little retracement. 10-year notes did not follow. We have a higher high with a lower close, so a little unreliable, in my opinion, a standard type of reversal. Sorry about this cough. So, in an area where it's topped out before, and it looks like it's topping out again on 10-year notes. If that's true, then I'm going to get a little dip in bonds at the same time, probably. Let's not see much of a dip and then turn right around and make new highs. Next, the crude oil, another down day after being overbought and turning around. I didn't expect it to be quite this big a break, but it is down to support. So if we're going to continue this little uptrend we've had for at least a couple of months, month and a half, and if you look at the lows, of course, on April 9th, well, yeah, of course, it's a bullish engulfing ER buy signal. And the low that was higher later, and the low that was higher, and then higher and higher. You obviously have an uptrend since April. But we didn't make new highs on this last rally, got overbought and turned back. So support's got to hold. We can't afford to close below 62.78 without doing some significant damage, I think. But the trend is still up. We're at support. I think we're maybe going to turn right back up again. Natural gas is continuing to come down in general from its head and shoulder breakout, which was on June 25. Nice, big, complex top I talked about for weeks before it broke out. So only one glitch in it. It closed one day above the neckline, but corrected that immediately. It went down a heck of a lot the next day for a new low close. Pardon me. So doodled around for a few days, dropped off a little, got oversold, support, bounced back, but not above the neckline. Great. Went all the way down to new lows, and we've been stair-stepping our way down now for about 2 weeks. A little oversold, bounced back, a little oversold, bounced back, a little oversold, bounced back, and I think this could continue still. My minimum downside objective is 1.1 and a half, and that I talked about way back on the original breakout day, which was 625, and probably talked about it before that because I already had a neckline in place. This has been a very good pattern. Next, we have a new low close on heating oil. Not quite at support, not quite oversold, so maybe it'll go down a little bit more. Doggone it. And we'll see if it can turn around at the lowest, 2.09, and maybe at about 218. Next, last significant reversal, a sell signal, ER sell signal on the top of the rally, July 23. Gold came down to support, got over, well, not quite oversold, nope. Got back to support, turned around a bit, rallied some. I think it's running out of steam. But right now, you're smack in the middle of a rock and a hard spot. So I got to wait for an upside breakout, although I favor bearish because of the last reversal was bearish and not violated on July 23. Next, we got a little oversold in silver. We bounced back for a couple of days here, but we're back to about a high that we made on June 18th that might end up being important. So I think we might dwindle the strength stop maybe a little bit above today's high, but not much, and start to go sideways to a little bit lower. I'm trying to build a sideways pattern here for the next couple of 3 weeks, and that's difficult to forecast. Usually up and down is a lot easier. Next, platinum got oversold, bounced a little bit, no big deal. Unfortunately, no red ER sell signal at the top there. We got the bottom pretty good, and some other major turning points as well, but not this one. All right, I'm neutral, looking for more bearish movement, back down to 1250-ish, and maybe even 1235. Next, copper crashed. The biggest one-day move and or probably percentage I've ever seen in copper in my 53 years. And copper was around when I started, 1971. So it hasn't recovered. I can give it a chance to bounce back even as high as, I don't know, 510, halfway back up in the big reversal range. There is some resistance in that ballpark and a little bit lower. So I'm actually looking for a minor upturn in copper, but that's not what's going to happen in the next couple of months, in my opinion. Copper is going to go quite a bit lower, I think. We do need to close below the lows in April, and that'll do it. You close below the April lows, and you'll be at a new low close for a year and a half. Major long-term bearish breakout. Next, soybeans, grains. Honest to God, I keep hoping I can come up with some bullish things to say, except for soybean oil, about beans, meal, corn, wheat, but they just don't have the strength. They got more resistance above than below. They've got keep making new lows on a closing basis, periodically getting oversold with a minimum minor short-term bounce and then new lows again. And I'm afraid that's exactly what's in store for soybeans, but it's close. If we get below 974, we probably will get below 970, and that is an intermediate to long-term bearish breakout, and I'm looking for those numbers to get touched and tested, and we'll see when we get there. Next, an outside down day in soybean oil could be the kiss of death. Normally bearish, and this is bearish. It is an ER sell signal. ER signals sell signal. ER, red, bearish engulfing. So it's not happening close to a top, which was that resistance and overbought, but it doesn't have to be. This is also fairly significantly down from the rally high, which I don't like, but I can't change my mind. So I'm looking for easily 52, 51, 60, 50, 60, and very, very more likely now, somewhere in the ballpark of 47. Next. Well, we had a rally. It came up to a previous high a couple of weeks ago in soybean meal, and promptly died, closing almost unchanged, maybe even almost a little lower, but not quite. Resistance stopped it, and it was small resistance. It wasn't that big a deal. Can't help it. I got to think sideways lower. Next, a new low again in corn. Now we're oversold, so maybe a little lower first and then bounce. Maybe a bounce right now. but the bounce isn't going anywhere. It's not going to last very long, and I haven't got any kind of a bottom in corn. Next was wheat. You can say almost exactly the same things for wheat. Next is shell. We're in a little tight spot. Resistance in general is stopping the rallies. Previous rally high, stopped the big one here, stopped that rally on July 29th. Now we see, I think we're about to start closing below 71.25, pushing it down pretty easily, I think, to 70 flat. And then we'll see what happens if it can close the rest of an old gap. It wasn't all closed. Oh, I'm sorry. I do see a wick here. I'm sorry. Yeah, it was closed. Everything was closed. That's why the yellow zone stopped on that day. Okay, so that's that. And I'm not sure. I think we can still get down to here. Remember, I think the indexes may be coming down for a couple of months, plus a little, somewhere in October for the turn. So I really can't get carried away on the bullish side in any stock at the moment. Next, we've already broken out to the downside a little bit, and Apple got a little oversold. The lows are around the same prices. The highs are coming down a little more sharply. I don't know. Looks like this could make a lower low this week easy. And then we'll see what happens at 198.5 and 195 flat. And if that doesn't hold, then we're probably going to be coming down to the 160s. Next, Tesla. Trying to break out of this pennant formation to the downside. It gave it a shot on Friday, but closed right on the bottom of the pennant on the close. So it popped back a little bit yesterday and did absolutely nothing today, sideways. But it's sitting on the bottom of the pennant formation. So I think it's about to break down, break out, and break some lows, and probably break a lot lower. Minimum 273, 4. Very plausibly 243. And as you know, I could get more bearish than that. You would simply measure from the high of the back of the pennant to the low of the back of the pennant, take that as a possible downside objective. Next, bearish engulfing on the top of the market on NVIDIA. Break the next day, Friday, just like the indexes. Came back a little, closed a little lower, just like the indexes. It is doing very closely what the indexes are doing, and you know the rest of the story. Back to the mini. You guys have a great day. Profitable trading to you.